Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist, taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hi, everybody. Welcome back. Sonu, it feels like we haven't done one of these in a while, but this is episode 88 of Carson's Facts versus Feelings. Ryan and Sonu back doing this again. See if we remember how to talk for a while. I think we'll be okay. Sonu, we're titling this one: How worried should we be about a slowing economy? We're starting to hear that a lot lately. But I want to start here. I want to start what we just talked about.
Okay.
India's stock market was down 6% on election results. Mexico's stock market was down a lot. I just know the Mexican ETF was down 10% for the seventh worst day ever. It's EWW, not a recommendation, but it's ew. That was an ew. That was an ugly day yesterday. Believe me, we are not experts at all in politics and how it all swirls around. I just know this much: we've had in the last 2 days huge moves on elections. We've got an election coming up, so that's a reminder to all of us. You can have final comment: news trumps charts. It's an old saying that as a technician, I believe charts and patterns can work to a degree, but news matters. And in Mexico and in India, I know India, you know obviously more about being from there. Why the Indian stock market dropped so much? And maybe if you want to tinker with the Mexican stock market as well, what'd you see there?
I'll start with the Mexican one simply because I know less and we'll get done with it faster. So.
There you go.
No, I won't spend too much time talking about the Indian election too. But look, I think it's about surprises. Yep. Right? We know that it's you can bake certain expectations in, but then it's always the surprises that catch you off guard, right?
Yes,
and that's what that, and
sure.
That's what happens. But that's economic news. Usually, it's economic news or whatever, right? COVID, etc. Things
Brexit,
like that.
Obviously, Brexit's one people remember. Mm-hmm.
Right, and it's funny you mentioned Brexit. It seems like elections have this very big. And the 2016 presidential election. I mean, so all of that, right? So with Mexico, we had the previous president. I'm going to see if I can get his name right. Andres Lopez Obrador, and I forget that AMLO is his short name. Form.
I'm going to say that's pretty close. That's pretty close in my book.
Yeah, Andres Manuel, I think Manuel Lopez Obrador. So that's his. So AMLO is. They can run only for one term, Mexican presidents. I think it's 6 years, something like that.
Okay.
So, but his protege, right? So this Claudia Sheinbaum, she was, projected to win all of that. And what's interesting, she's got a very interesting background. She's got a PhD in physics, I believe, or energy. I think it's energy engineering, something like that. Anyway, she co-won the Nobel Peace Prize in 2008 for her work on climate change and things like that. So anyway, all this to say, results were as expected in the sense that everyone expected her to win. She won, but she won by a resounding majority. Now they can potentially go for constitutional reforms, things like that. So there's some worry in the market that could they be unfriendly to markets, right? So I think that's why you saw the Mexican stock market do. It was actually the stock market fell about 6%, and that's interesting because India's stock market also fell 6%. It was a Mexican peso that fell 4%. Right. So it's just another reminder when you're, as US dollar investors, as a lot of us, our clients are, if you're investing in international markets, you're also taking currency risk, right? Mm-hmm. In this case, the Mexican stock market fell 6% and the peso fell another 4%, which is the biggest drop in ages. I forget exactly when, but total the ETF, the Mexican ETF, not a recommendation to buy or sell, anything like that. That fell about 10% yesterday. So that's what happened in Mexico.
I'll just chime in here for a minute then. So really interesting. In last week's podcast, we were joined by Jeremy Schwartz over at Wisdom Tree. Please listen to that one. We talked about some of those Wisdom Tree ETFs, which kind of take out currency risk. But you can listen to that. Very interesting what's happening right now. And again, just to put this full circle, I mean, what markets hate, and we've talked about this, but let's remind listeners, they hate uncertainty, right? I mean, they can live with bad news. Look at what's happening 4 years ago right now. There's a lot of bad news going on, but the market last May of 4 years ago was up like 10% and had a huge rally. So it's those big the uncertainty that gets you, right? So again, we'll see. But again, final comment on this, but a bow on it. last couple elections. Well, let's look at the last election, right? You hear about like a major blue wave. That was one of the potential worries, was too much power, honestly, for one particular party. It could be red wave or blue wave.
What just happened in Mexico? Too much power. And actually, the opposite in India. I'll talk about India, but you go.
Yeah. But then what happened in the U.S., at least, yes, President Biden won, but you look at the makeup of Congress, it was about as gridlocked as you could get. So there was no major blue wave. There was no Puerto Rico and D.C., the 51st, second state, some of the more extreme things that were at least being floated out there. I don't think the market would have liked that. Again, like we're seeing in some of these other countries where you have a big majority win, and they can change the rules in essence because they have so much power. So we'll see where we go. We've talked a ton about the U.S. We'll get more into it. But that's just some context around, I think, kind of that uncertainty and too much power. So you're a little more of an expert in India, obviously, given you're from there. What have you heard from anyone back home? What's kind of what are the boots on the ground telling you about the surprise election or the surprise results?
I mean, everyone's stunned. I think I would pay, even folks there. Okay. By the way, my college roommate, my first year college roommate back in India, he won a seat. He's now a member of parliament. Right, he's not with so he's not with the Modi's parties or the opposition party. I think they will be the minority. But again, goes to the other part. Too much power. The other thing markets don't like, you mentioned it, uncertainty. What we have in India right now is uncertainty because we have. So in India, it's a parliamentary system, sort of like what Israel has, the Knesset, if people have heard about it, or Britain's parliament, right? I mean, it's literally the same system that India has. So it's mostly, there's no House or Senate. There is an upper house, but that doesn't count as much. It's the main house is called, the Lok Sabha. It's the people's house, right? That's literally what it sort of translates to. And you need 270 seats for a majority. Prime Minister Modi's party over the last 2014, 2019 elections, their coalition won about 350 seats, right? So it was almost like his party didn't have to worry about coalition partners because his party by itself could have had a majority. So when you have your own majority, you can do things that are friendly to markets, things like that. That's why markets have always been more positive about Modi. I think he has been market friendly. At the same time, he's pushed a lot of fiscal stimulus this year. No surprise. I mean, election year.
It's an election year. There you go. It's not just not a U.S. thing, apparently. It's
not a U.S. thing. Exactly. Like you push some subsidies in to get the price of kerosene, gasoline, all that down. Make food a little cheaper, stuff. All that was going on, right? But everyone does it. I mean, it's not just the Prime Minister's party. But see, get this, 2 days back. So you have opinion polls before the election, like we do here. But after the election, so India's elections run for about a month and a half because it's big. So it's a month and a half.
That's like the NBA. That's like the NBA finals. They just go forever. It's kind of an Indian election apparently. Which is going to finish first, the NBA finals or?
No, so the counting happens. So there are, like, my parents are in India, in South India. They voted about a month and a half ago.
Wow.
Right? They're finding the results only like today.
Oh my god,
that's incredible. They voted in April, so it's
some
like
people might have forgot what they voted for by then. If it's a lot of different things, like, did I vote for that
exactly.
That one or not? I don't know. Yeah.
Exactly. So it's like no one, the world's largest democracy, but there are little, it's massive, right? You're 1.5 billion people. I mean, obviously all of them don't vote, but you do have, I think it's about 60% more than that voting, slightly higher. In the US, it's about 50% of registered voters who actually end up voting. So anyway, all this to say, exit polls, which was after the election, so 2 days back, exit polls came out. They were projecting like 350 to 400 seat majority for Modi and his coalition partners, right? Remember, you need only 270 to make up the government, right? They were predicting 350 to 400, and now they're struggling to get past 270 together as a coalition government. Modi's going to need some fickle coalition partners. So they may get to like 250 seats. To get to 270, they're going to say, okay, I have a coalition partner, and you know what happens? There's what we call horse trading that goes on. Like
give and take.
Yes, there's a lot of give and take. There's a lot of uncertainty there. I think that's why the Indian Nifty 50, by the way, the Nifty 50 is the Indian main index.
Yep.
That fell about 6%. I haven't seen the rupee yet, the Indian rupee, where it is versus the dollar.
Well, but India, I mean, their stock market had been doing really
was roaring.
Well. I mean, one of the strongest in the world. I mean,
yeah,
without knowing the exact numbers off the top of my head, Indian stock market was really strong. So,
I mean, if you look at a chart of Indian stocks versus Chinese stocks, it's literally gone in the opposite direction. Indian stocks have gone up a lot. Chinese stocks the other way.
Look how proud you are when you said that. So I mean, there you go. Hey, I don't blame you.
That's
there you go. Absolutely. Listen, so that was an interesting discussion, but again, we are aware there's a lot about this election coming up. We're gonna have I won't say who quite yet, but we've got some pretty big guests coming on to talk about the election
Yeah.
and different things that we know that's important. But let's dive in a little bit more. So we're going to talk about three things: stocks in May and June, good bounce in May. Let's talk a little bit about June. We're going to talk about inflation. I saw some better inflation data, specifically the PCE. But we're hearing about a slowing economy, so kind of lump that together. And depending how much time is left, because we talked a little more about India and Mexico, but I thought it was interesting. Maybe a little bit about the consumer. So let's see. I'm looking at the clock. We've got about 25 minutes, give or take,
Perfect.
Sonu. So let's spend about 10 minutes or so, if we can, on May and June. Remember April, everybody, we had that, we'll call it mild pullback, about 5.4%, 5.5% S&P 500, a rough-ish April. Yes, April's usually strong. We had a five-month win streak coming into it. Then sure enough, we bounced. I mean, this was like one of the best Mays ever. I've got some data. I'll get it here in a second. I just want your context on what you think happened, Sonu. Why did we see such a good bounce back in the normally weak month of May? Is there one or two main things you think, or a couple things? What did you find? I'm going to get some data to talk about.
I'm going to go to my usual backup. Well, earnings are better than expected for the most part. Earnings are pretty strong.
Yeah.
And if you look at forward projections for earnings, that's been going up. If you look at forward projections for profit margins, that's been going up. I mean, what more do you need, right?
Keep it simple.
I mean, there's a lot that goes in. And I was going to ask you about utilities, actually, interestingly enough. Utilities is not something you think about when stocks are going up. In fact, you think, wait a minute, are defensive stocks starting to get more popular, right? If you're seeing a rally or some momentum in things like utilities. I went digging into this, but I want to get your take, your a little more, macro take on that.
Well, absolutely. So, listen, not super worried. Yes, if you told me utilities were like the strongest group, and last month it was, it had some big moves. Now we're starting to hear maybe it's a play on AI potentially. I'm not totally sold there. But remember, utilities had a terrible, terrible year last year. But as we've talked about before, and why was that? Because interest rates stayed higher. So now rates have come back a little bit. We'll talk a little bit about that with the inflation and the economy in the next segment. So there's some tailwinds there. But Sonu, I guess just from a market's point of view, right? Again, I'm a disciple of John Murphy. Message of the market. Yes, if the defensive things are leading, that's usually not what you want to see in a good bull market. But what we're still not seeing, parts of healthcare are still not leading. Consumer staples continue to lag. So if we see some of the more defensive areas of healthcare, maybe like the drugs and some of the big boring, healthcare companies, I say boring, but hey, they make a lot of money and they're defensive when they need to be. If we see leadership from those areas, then I'll be more worried. But it is interesting what's happening. And maybe back to you though. So do you think it's really an AI play? I mean, that's what people on TV are telling us now. Utilities are red hot. Is there maybe an AI play there also that we didn't quite see before?
So I went digging into this. I mean, yes, generally you could say, okay, AI play, it's easy, but then really can we get a little more detail than that?
Sure,
right?
Sure.
So just looking at the components of the XLU ETF, again, none of this, I'm going to mention some companies, not a recommendation to buy or sell or anything like that. But Nextera Energy, it's about 14% of the XLU ETF. It's up 33% year to date, 19% in May. Constellation Energy, it's about 6% of XLU, the utilities ETF. Up 87% year to date, 17% in May, Ryan. So, and then you have companies like Duke Energy, Southern, American Electric Power. A lot of these utilities are coal dependent, but now because of the Inflation Reduction Act, they have a lot of money to spend on CapEx to convert them away. Nuclear is a big part of it. Even in addition to the Inflation Reduction Act, which gave subsidies for nuclear energy, Illinois is one. Illinois is giving, on its own, more subsidies for nuclear. Actually, about 50% of power in Illinois actually comes from nuclear, by the way. It's the most in the nation, I believe.
Wow.
Slightly above 50%. But even New Jersey, Connecticut, New York, states like these are giving subsidies for nuclear. So there's a lot of CapEx spending going in. There are tax credits for, storage, hydrogen, all of that. So I think that's the utility story on the ground, what's happening. I mean, there's a broader AI story too. Why do we need more power? Well, because the computers take more power. It takes more power to run all these computers, data warehouses, things like that, the stuff you need for AI. But the question is, where do you get that power from? Now it's no longer, as much heavy on coal. It's from all of these other sources, including nuclear, right? So I think that's part of the story. That's what's happening right now.
No, very, very interesting. Again, we're not overly worried about utility leadership. Again, if we saw some of the other areas, but there are some potential fundamental reasons. I mean, NVIDIA came out again. I don't think we
Yeah.
talked about NVIDIA in the podcast because we took a week off there. But once again, really strong earnings. Continue to
Boom.
see a lot of positives, and I guess utilities moved with that as well. But here's some things to think about. Down 4% in April, at least 4% for the S&P in April, and then up at least 4% in May. So kind of a slingshot. Honestly, guys, usually it's the opposite, right? Usually April's pretty strong and May is just so, but not this year. So only twice in history has that happened. 1936 and 1942. 1936 was the Olympics, which was pretty controversial at the time. And 1942 was like on the precipice.
Was that the one with Jesse Owens?
Yeah, I believe so. Yes. Yeah. And then 1942 was obviously World War II was on the horizon. Now, I'll just say this much. The rest of the year in 36 and 42, small sample size, don't blindly invest in this. I'm just saying after you have a washout and then the strength in May, the rest of the year, both times is up about 19% in 1936 and 1942. So just think of that. But here's some other ways to look at it. We're up at least 10% for the year after the first 5 months of the year, as of the end of May. Like we were up this time 10.6%. Best start to a year since 2021. We're up 11.9 after the first 5 months. June, which is normally not a very good month, down on average since 1950, just a little bit, but still down on average, and up about 55% of the time. When you're up at least 10% for the year going into June, Sonu, those numbers jump to 1% on average and a median of 1.8% in June. How about that? In an election year, June tends to do pretty well, third strongest month of the year. But here's what really got me. The rest of the year, after a good start, after at least 10% the first 5 months of the year, the rest of the year, it's happened 20 times. Make sure it's 20 times. Give me 1 second here. Let me go up here. It's happened 19 times. Sorry. This 19. Was the 20th. That makes sense. This is the 20th. That's why I had 20 in my head. The rest of the year up about 9% on average, median about 9% on average, and higher 84% of the time the rest of the year after a 10% start to the year. One more here. When May gains at least 4%, like we just did. And I think this might be the 20. Let me just do a quick search. Oh, no, it's not 20 times. How many times has this happened? Oh, it's 10. Okay, yeah, 10 times. 10 times this has happened. When you gain at least 4%.
In May?
In the usually kind of weakish month of May. In May. June, up 1% on average, median of 1.3, higher 8 out of 10 times. The rest of the year is higher 7 out of 10. But listen to these returns. The rest of the year is up 10.5% on average, median of 12.9. The most recent times we had a May of at least 4%. 2020, rest of the year gained 23%. 2019, rest of the year gained 21%. 2003, rest of the year gained 15%. 1997, rest of the year gained 14%. And then you've got 1990 and 86 in there. Yeah, the rest of the year is negative. But I'm just saying, recently, a lot of numbers there. Recently, when May's strong, it's not bearish. I'll put it that way. What do you want to add to that conversation there, Sonu?
So we already, a month ago, we talked about don't sell in May and go away.
Yes.
Don't take your marbles and go home. Just because, and this is always a concern because we just talked about earnings too. So, we can tie that in. Like, markets are record highs, right? Now, it always seems strange that, maybe that's it. We can't get any more out of it, right? Maybe we should take our marbles and go home. But don't do that, right? I mean, all the numbers you pointed to, everything you've quoted, most of your work really tells you that, you're better off just sticking around. You get new highs only if you got previous highs, broken, right? I mean, that's just the way momentum works. And now we have momentum. And, looking at your numbers too, I think June, July, August are typically positive in an election
year,
right?
Yeah, better than average. I mean, July is usually a strong-ish month. It's in your average summer. It's not quite as strong an election year. What's interesting, though, is election year June and August, usually not that great, are actually better in an election year. And again, there could be small sample size. There could be random things happening. But as we laid out, well over a month ago, we thought there could be I'm going to call it surprise summer rally. Well, that is obviously, I think, has started.
Confounding thing this year is that we're actually going to have a debate between the two contenders, President Biden and former President Trump, in June, Ryan, at the end of the month. I just found that out yesterday. Apparently, we're going to have a debate. Usually the debates are in the fall, right, in September and October. We are apparently having a debate at the end of the month. So maybe, I don't know.
Get your popcorn ready. That will be That will be
Speaking of
interesting.
uncertainty, and who knows? Maybe
Yes.
things will be more clarifying after that. But
Well,
I
to
don't
be
know.
honest, what I was thinking in the back of my head with the whole you got to vote and wait a month and a half in India. Imagine here with all the different things that could happen, the age of the presidents and different things. I mean, my goodness gracious,
Yes.
you vote. Maybe I should have voted for that particular person. Either way, all right. So let's jump forward. I do want to point out Berkshire Hathaway. We're big fans of Warren. Uncle Warren, did you see his stock was down 99.97% yesterday? For a split second. For a split second.
For a split second, I saw that somebody jokingly put up like an AI post by I think it was Zero Hedge. Obviously, it has to be Zero Hedge.
Zero Hedge.
Saying,
they were thrilled.
But Berkshire down 100%. Right? And I mean,
right.
No, folks, Berkshire is not down 100%. I mean, what happened?
Well, you know what? Honestly, I didn't get a ton of time to look into it. I'll just put it this way. There's some other big names that did it, and it gave me flashbacks to, I believe it was May 10th or 9th of 2010. I know that because that was the flash crash, and I was trading options at the time. I remember watching on TV. That was when they had the Greek riots. Remember, there was a very big deal. People kind of forget this. It was all over TV. The Greek riots were really going crazy that day. Everybody's watching it.
It was the debt crisis and all of that. The debt
crisis. But here's the thing: no one to this day even still totally agrees on how the flash crash started. It might have been a big firm in Kansas. It had some options that were leveraged. Listen, but no one seems to agree on it. The bottom line is it happened. What I'm I guess what to say relieved about is yesterday we saw some, gee whiz, Warren Buffett's company down 99.97%. But people were calm about it. We didn't see another flash crash necessarily across the market. And yesterday, I mean, stocks were down a little bit early because of some of this flukiness, and then they came back. So I guess it's a reminder that, the machines are still out there. We know the machines are still coming with AI. These things can happen, and I guess cooler heads prevailed. So Sonu, let's talk about inflation.
Cooler human heads.
Cooler human. That's true. That's true. Let's talk a little bit on episode 88, of Carson's Facts versus Feelings. How worried should we be about a slowing economy? Let's talk about that. We'll combine two things, though, because we saw some inflation data last week. PCE, the Fed's favorite measure of inflation. Feels like we talk about inflation all the time, and we do because it matters. But also we've seen some weak-ish economic data, and that's been, we saw yields. I mean, yields tanked yesterday being on Monday. Monday. Again, is it inflation coming back? Is it worries about this, worries about that? Maybe looking around the globe with these crazy election results. I mean, whatever it is, we saw yields drop. And so I don't know where you want to start with this. Inflation, the government's the data slowing. Where do you want to take it? But take it away.
We'll start with the inflation stuff, but let's put this into perspective. You talk about uncertainty, and we just talk about surprises, right?
Yep.
So the surprises we've gotten recently have been to the negative side, right? Yep. Economic data has come out lower than expected, right? The pace of growth for certain indicators, we can talk about this, whether it's income consumption. It's, been slower than what we saw in the prior months, right? Maybe Jan through March. Yep. And so I think expectations. So here's what's happening. As the economy is slowing, yes, I would say, but it's slowing from a red hot pace from where the economy is growing really above trend. Let's say close to about 3%, something like that, to maybe something along trend, maybe 2 to 2.5%, right? I want to be clear. We're not talking about anything close to a recession. We just got labor market data today. The JOLTS indicators, right? So job openings and labor turnover survey. Layoffs. The layoff rate is much lower than what it was before the pandemic. 1% is the number of layoffs as a percentage of the workforce, right? 1.5 million is the absolute number of layoffs per month. You think, oh, that's a big number. Yes. Before the pandemic, we were running at about 1.8 million. And by the way, the workforce is larger right now.
Sure.
Right. And so layoffs are really low. Hiring has eased. That's for sure. Right. We're not seeing red hot hiring like we did in 2022, early 2023.
Right.
Right. So the net number of jobs created, it still looks large, but it's mostly because there's less turnover. People are quitting their jobs less. People are being laid off a lot less. So it's still a strong economy. Right. Is it running red hot? No. And that gets to the inflation data. Right. I mean, inflation, remember the narrative in the first quarter was like, oh, I'll be headed for stagflation.
Oh, yeah. Right. Just last week, I think we heard that. I mean, yeah.
And then you put up a nice chart. This is a good way to think about it because I think your tweet, I think this morning sort of nailed it. If you have stagflation, if you're worried about renewed inflation pressures, the first place you should look at are commodities. Exactly. And within commodities, maybe look at oil. I think you tweeted something about like commodity prices actually gone down Copper's down a lot.
They tanked the last 4 days. They were strong, don't get us wrong, but they've tanked lately. Mm-hmm.
Right. Oil prices are down below, I'm just looking at my screen here, it's below $74 a barrel.
Wow. Yeah.
Back in April, I think early mid-April, it was about $90 a barrel. So no, you're not getting stagflation. You're not getting renewed inflationary pressures if oil's come down 15% thereabouts over the last, month and a half since the Indian election started, actually. But maybe that's something.
Way back then. Way back when the Indian election started. Yeah.
So, but anyway, we got we got hot inflation numbers, hotter than expected, right? In Q1, Jan, Feb, and March. April was a relief report, right? It was right along expectations. Big picture is this: there's no inflation resurgence. And there's actually good reason to believe, you and I have talked about this ad nauseum. We don't have to go into this because of things like lagging shelter, official shelter inflation, things like that. It's very close to I think inflation is actually pretty close to the Fed's 2% target, right? And, it looks like inflation stalled if you look at the headline PCE number, which is the Personal Consumption Expenditures Index, which the Fed prefers. It looks like, that's been stuck between 2.5% to 3%. And we made no progress over 6 months since last October or so, October, November. But it's really, if you look underneath, we are making a lot of progress. I looked at 178 core inflation categories, right? The PCE index has more than the CPI, the Consumer Price Index. And in December 2019, so before the pandemic, just 10% of these items had inflation rates of 4% or above. In June 2022, remember when inflation peaked, 58% of the items had inflation rates above 4%. Okay. Now, in December 2023, like 5 months ago, that fell from 58% to 42% of items had inflation rates above 4%, right? Out of 178 items I looked at. In April, that was back down to 33%. Now, it's not, before the pandemic, we were at 10%, but we are making progress. That's the story, right? So, I think we have a Fed meeting coming up in about 8 days, next week.
Next week. Yeah.
Yeah. And they're going to talk hawkish because they're like, we're not confident that inflation's heading to a target. Yeah. But the reality is the inflation story is sort of, I think, baked in. The other thing is, look, if you're talking about a slowing economy, like that, and oil prices are lower, there's no stagflation. There's no renewed inflationary pressures. You can't have it both ways, right? Like either the economy is slowing, that means inflation's coming down. If inflation's going up, that means the economy is probably overheating. We're not seeing that, right? I think the economy is normalizing. That's what we see in the income and consumption numbers, right? It's nothing to panic about. I mean, and these numbers can be revised. I should say these numbers can be revised. So you look at the 3-month average and real incomes have sort of been flatlined. But I think, look, we just talked about oil prices heading down. That means gasoline prices are heading lower. It means real incomes are going to be positive, especially because food prices are also coming down. So all of that is, I think, a story that tells you, the economy is okay. It's growing maybe a long trend. That's what we see in our indicators as well. We combine so many of them, as you know,
yes.
Right? And, it's nothing recessionary, I think. So I do think we'll be helped a lot by the Fed taking its foot off the brake pedal, to be honest. I'll leave it at that. You can go more.
Good stuff there. We talked again about the CPI and PPI, consumer and producer level, a couple weeks ago. Again, didn't come in hotter than expected, and now PCE came in last week. Again, not hotter than expected. So again, those are some positives. I mean, look at the reaction to the markets, right? Yields have been going lower.
Yeah.
So I'm not so sure. Now, I do know Fed fund futures are popping around. I mean, is two cuts priced in, or is it back to one right now? It's been flirting in between there, right?
It's sort of one cut plus somewhere between 50 to 75% odds of a second cut. I mean, even if you have 60, 70% odds, it's as good as a coin flip. Mm-hmm. There was a 70% chance that Hillary Clinton, I think, would have won the 2016 election, and 30% chance that Trump would win. But we know what happened.
The things happen. So, no, good points there. And again, so inflation, we've talked a lot about it. We're not overly concerned. We think there's some positives there. And I love how, again, you looked at 178 components of PCE and found, listen, under the surface, there is a lot of improvement. Now, let's talk about PCE consumption, because that, again, some of the worry. Consumption was up 0.2% from up 0.9% the month before, expected up 0.2%, but real consumption was actually lower, so adjusted for inflation. So I know you talked about this, Sonu, but let's talk about one more time to put a bow on it. That's not great data, but you think it's just a 1 month thing because consumption was strong the quarter before, or where do you lie there?
I think it's a two thing. 1 month thing. Also, there's something going on under the hood, which is we're seeing a real slowdown in goods consumption.
Okay.
Remember, after the pandemic,
Yep.
goods consumption went up. I mean, like the number of Amazon boxes at home coming to my house have also fallen.
Well, I'll jump in. So my son got Invisalign, which I don't know if they're publicly traded or not, so I'm not recommending the stock. But Invisalign's the thing. You put the braces in, you can take them out.
I had that years ago.
Okay. So I had traditional braces where you put them in and you don't take them out until you take them out. This is something a little newer, I guess. Anyway, and I knew he's like 13, but he's pretty bright. I mean, he gets good grades and whatever.
Okay.
But in terms of like real world, I worry about him because he's just like walks in front of a street. There's a car coming, like he has no idea. Anyway, but last night we're eating. He's like, "Oh no, my braces." You can imagine where this goes. He took them out, put them in a paper towel or something. We had some pizza, or whatever. And
you didn't throw it in the trash, right?
Oh yeah. So he and I are digging through the trash last night because I'm like, but now the good thing is, again, he's got different sets. The way this works. What I'm getting at is we eventually couldn't find him. Then eventually we realized our dog Mabel, I've talked about her before, are now like 110-pound Great Dane. She's still a puppy, so she's crazy, but she's the size of a small horse. And anyway, she like apparently got him, and she was running around the house with him. We found them in a different part of the room. We're like, well, we didn't put them there, but we did find them. But anyway,
so I don't know the fun chewy toy.
Oh yeah. She just knew it was special because we were telling her no probably the day before not to touch it. But anyway, so I think I'm going to be spending a lot more money on these braces because he takes them out and loses them. Is what I'm getting at. I'm trying to help the economy.
I have done that in the past. Put it in like a roll napkin or something like that.
Sure.
Like,
and then I clean up the pizza. I don't know what's in there. So of course he knew I'd be mad. He knew I'd be. He goes to his mom.
Fault, huh?
Well, no, he goes to mom, and they were like sneaking around trying to fight. What are you guys doing? Because they knew I wasn't going to be happy. So anyway,
those things are not cheap, by the way.
But... Dude, trust me. I mean, it's like every time I turn around, it's like, oh my goodness, can I have one kid with straight teeth? Just one kid with straight teeth. That's all I'm asking. That's all I'm asking.
Apparently, kids don't come with straight teeth. I didn't know that.
I guess not, or it's just a big scam too. We'll leave it that. All right, so we do. Let's. But see. I don't even know where I hijacked this whole thing. Let's talk about consumption.
No, what's happening is it is 1 month data. I mean, you always want to take a 3 month average. I think those look fairly reasonable. But the other thing that's happening is goods consumption has significantly eased. The baton's being passed to services, right?
Okay.
And services have been running pretty red hot. But even last month, after adjusting for inflation, services consumption, which by the way makes up about 45% of the economy, right? We talk about consumption being between 65-70% of the economy. Most of that is services, 45% of GDP, and consumption running about 1.2% annualized pace in April. That's slightly below the pre-pandemic trend, but that's 1 month. It's so noisy, right? Wait a minute, let's wait a little bit to make a declaration one way or the other. But some positive news. I'll finish here. We got yesterday May auto sales. Auto sales obviously a big part of the consumption basket. Mm-hmm. Auto sales went up from 15.7 million in April to 15.9 million. This is annualized pace, right? Seasonally adjusted as well. So at least that's trending in the right direction. If you're worried about a recession, I mean, what's the first thing people step back from? It's things like, I'm probably not going to buy that car. Right?
A new car would be, or even used car. That'd be
would be on top of the list, right? We're not seeing that. And the trend is higher. It's still below. Before the pandemic, we were averaging around 17 million cars per month.
Okay.
Seasonally adjusted annualized pace, right? We're well below that, but I think that's been more of a supply issue. There's low inventories. I mean, assemblies are just about picking back up, right? In terms of production, supply chain issues are just about over now. But, I think sales are going up. That's a good story. And so overall, I think consumption is okay. I mean, we're not hearing, even from the credit card companies, things like that, we're not seeing anything.
Sure.
If anything, everyone's like, oh my God, credit card debt is increasing. Well, if credit card debt is increasing, consumption's not slowing, right? You can't have it both ways again.
Yeah, and again, we ran out a little bit of time, but we were going to talk a little about the consumer, but we did talk about them here. Go to carsongroup.com/research. That's our blog. Sonu and I both did some blogs on the consumer just recently. You'll find them there, where, again, the consumer is in a little bit better shape. I will also point out, I think this is interesting, real world, because you and I do this for a living, obviously. We hear from people all the time. I present, they say, well, listen, things cost more. I go to the grocery store. I know it used to cost me $82. I buy the same thing, and now it's $102. I just made those numbers up, but it might be fairly close. And that's true. I mean, we're not minimizing that. I will say this. McDonald's just came out with the $5 value meal. Wendy's, a $3 breakfast, and BK, $5 Your Way meal. Target and Walmart also said they're going to have a price wars, price drops. Target's dropping prices on 5,000 products, I believe, and Walmart 7,000. And Walmart's CEO or CFO get all choked up talking about this. I believe the CEO actually used the word deflation in a lot of cases and some of the things that they were seeing. So listen, it's not perfect at all. But again, there are some signs. Maybe we've hit the point where consumers are saying, you know what, I'm not going to spend that anymore. I'm going to wait now. And now companies see that and they're starting to lower prices. And again, that comes into, well, is that because demand is topping? We don't think so. But maybe we're hitting that equilibrium where this is all part of an economic cycle. This is the way things go. We obviously watch data every single day. I had one more, Sonu, from you. Yeah, this is great. This is awesome chart you
surprised me.
Yeah, well, let's see what you said here. Hopefully you said this. I don't know. I saw it online, right? What did Mark Twain say? Don't trust anything you read on the internet. I read this on the internet with your name on it. PCE since February of 2020 up 18%. So that's like that, inflation up 18% since then. Employee compensation's up 24% and disposable income's up 25%. So yes, inflation's up a lot. No doubt. We're not arguing there. We know it is. It's true. But in a lot of cases, not every case we're aware, but in a lot of cases, people's incomes have actually risen more. And again, Sonu did a great blog on carsongroup.com/research. You can read that. The Fed's coming up. How do you want to wrap this up? We got a couple. Oh, here, let me say this. Thanks to Chelsea, always our producer, for getting this through. Sonu, thanks to you for a good conversation. Episode 88. Help us out by telling us how we're doing. Leave a review. Use the thumb buttons and subscribe if you want to hear the latest. I think it's next week. I think next week's Professor Siegel, right?
Yes, I believe so. Yeah.
Yeah, I mean, believe me, these things can change. We've got this all set up. We recorded an amazing discussion with Professor Siegel last month in Omaha at our Partners Summit, live on stage. Sonu and I, literally to standing room only. I think we saw the numbers. This was like one of the, not too surprisingly, largest attended. And it was, when I say standing room only, I mean, there were people everywhere. And this conversation was awesome. Professor Siegel, he was hilarious. We've had him on the podcast before.
He's great.
I think face to face.
Yeah.
Oh my, he was out all night the night before. Not for what you think. He had a lot of travel issues. So he was going on, I don't know, 2 or 3 hours of sleep, maybe a bunch of coffee, but he was juiced. It was an awesome time with Professor Siegel. He was hilarious too. I mean, he was really funny. You will love next week's podcast. All right, Sonu, wrap it up. What do you want to talk about next minute or two? People should be paying attention to, then I'll bring them home.
I think it gets back to the title of the episode. Should we worry about the economy? Was that the title? Anyway, like whatever.
Something like that.
Yeah, something like that.
I don't know.
Look, the economy is easing. It's normalizing. This is part of the normalization story. It's going along trend. I don't think there's anything to worry about, at least so far. And in everything we're going to keep track of. But keep listening to the podcast for more.
Absolutely. Well said there. Again, episode 88, how worried should we be about a slowing economy? And let's just put it this way. Okay, maybe there's not as many cuts as before. Maybe there's some cracks in the consumer. We're not disagreeing there. This is literally one of the best starts to a year we've ever seen after 5 months. I mean, let's just put some, and oh, by the way, that's after we gained over 20% last year for equity. So let's just put this in context. There's always something to worry about. And believe me, we get paid to worry. We get paid to see what the problems are out there and dissect them and see what's going on. Overall, we've been overweight equities for a long time. If you listen to this podcast, we continue to be in that camp. And we think the surprise summer rally is alive and well. And with all of that, everybody, thank you for listening. You're going to love, hopefully you enjoyed this week's, but you're going to love next week's with Professor Siegel. We'll see. So Sonu, you and I will be back live, I guess, in 2 weeks is how we'll do
2 weeks,
it. So, 2 weeks we'll be back. I'm sure we'll find something to talk about then. So we'll see everybody then. Yeah, I hope so. And if you're having some summer vacations, have some great summer vacations. Long time in the car. Save these podcasts. Download them on your phone. Listen to them in the car. I'm sure your kids will love listening to Sonu talk about 178 components of CPE, PCI, PCE, whatever. It doesn't matter. You'll put the kids right to sleep. So, all right, everybody. We'll see you in 2 weeks. Enjoy next week's podcast. Take care. Thank you.
Information provided on facts versus feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.